Good afternoon, everyone. Welcome to webinar number 7 of our 10-pack for property and casualty insurance. My name is Paul Rosen. I will be your presenter for this afternoon's webinar. My assistant, Darlene, will be the moderator. So any questions that you have, please type them in on your question, on your chat, and Darlene will be more than happy to address any questions that you may have. Today's webinar is going to be covering the commercial package policy, and we're also going to be looking at our different commercial property forms. So sit tight. We got about 12 minutes to go. Grab a nice drink for yourself, a cold drink, iced tea, soda. No alcohol. We want you to have clear heads here. Coffee, tea, soda, water. And we'll start up shortly. And Darlene, if you are on the call, if you just let me know that you could see and hear me, then we will be good to go. Darlene's giving me a big thumbs up on the video. Yes, okay. Give me a big thumbs up. Excellent, excellent. So I hope everyone's day is going well for them, or as best as we possibly could expect under our very extreme circumstances. It looks like we've hit the apex, and it looks like things are just slowly but surely starting to decrease as far as new cases, deaths, admissions. There are increases as far as hospital discharges, so that is very good news. That is very good news. Good afternoon, Jason. Welcome to the webinar. Thank you for taking the time out of your day to join us, and thank everyone else on the call today for joining us. We appreciate you. Bottom line is that we don't have students, we don't have a school, so we are very grateful that you've selected Kaplan as your educational provider. Thank you, Pinol. We appreciate it. I always give my heart and soul in everything that I do, and I've always was taught as a kid that if you don't give 100% in what you do, don't even give 1%. So I always make sure I give 100%, best effort always. I try to please everyone that I possibly can. You know, they always say in life, if you please 99% of the people out there, you're doing a phenomenal job. So, you know, there is always going to be that 1% that no matter what you say, no matter what you do, it's always never going to be good enough for them. So, you know, for those people, I say, well, I gave it my best shot, and I'm sorry that I disappointed you, but we're pleasing 99% of the people out there, then I would say we're doing a really nice job out there. So we'll be starting up in about 9 minutes. I am transmitting from absolutely picture perfect day here in northwestern Georgia, city called Dallas. Yes, there is a Dallas, Georgia. Everyone knows Dallas, Texas, but I am in Dallas, Georgia. As you can tell from my Brooklyn, New York accent, I am originally from New York. I actually moved down here last summer, and I absolutely love it down here. We were all ready to put our house up for sale in New York, and unfortunately my wife is stuck in New York right now with the epidemic. And hopefully, as we start getting to better weather, warmer weather in the Northeast, that things will be good. You'll overlook the whole Yankees thing. Oh, let me tell you, Jason, You could take the boy out of New York, but you can't take New York out of the boy. I'm still going to root for my Yankees down here. And hopefully the cheating, which occurred in 2018 with the Astros, in 2019 with the Boston Red Sox. Hopefully everyone will play legitimately now. And you know, let's win fair and square. That's the bottom line. Let's not cheat. Let's win fair and square. So hopefully, teams that did cheat learn from their lesson, because you know we're supposed to set examples for kids. And if the adults are cheating, then the kids think that it's okay to cheat. So we don't want to do that. We want to do things legitimately. All right. That's the way I don't know. That's the way I was raised. I don't know. Maybe I'm just old school, old fashioned. You know, it's funny, as I get older, I'm 63 now. And I always said, I'm never going to say the things that my parents did. And guess what? When I'm talking to my two daughters, my daughters are going to be 25 and 29 later this year. And when I talk to them, I hear my dad talking to me as far as the things that I'm saying to them. And here it is, I said as a kid, I'm never going to talk the way my mom talked to me, to my kids, and I'm just repeating history here. But my parents did well by me, I think. You know, I always care about people. I'm always honest. Sometimes I get hurt too much by being too kind and considerate, but you know what? I always believe karma gets even with people over time. So, you know, someone tries to pull a quick one on me eventually. The law of averages kick in. We all know that from insurance here. So we've covered so far, all right, we're not starting yet, but so far we've covered our introduction to insurance, our contracts webinar, our basics of property and casualty, our dwelling webinar, our homeowners webinar, our personal auto webinar. So today's webinar is going to cover the commercial package policy and our commercial property forms. Tomorrow's webinar, Wednesday the 29th, will cover farm insurance, equipment breakdown, commercial liability, which is where there's a lot of questions on the state exams. Then on Thursday, we'll look at commercial inland marine, crime insurance, lots of glossary terms there, commercial auto, the miscellaneous commercial policies, DIC, insurance, commercial umbrella. And then we wrap up our series of 10 on Friday, new month, May 1st. Another mortgage payment. Got to be lucky, though, that I got the money to pay it, so I can't complain. We'll be looking at the BOP policy, the business owner policies, and workers' compensation insurance. All right, we got about 5 minutes before we're going to start the presentation. Those of you who just came on the call, welcome to our call. My name is Paul Rosen. I will be the presenter, and my associate, Darlene London, will be the moderator. So she'll be answering any and all of your questions that you may have to the best of her ability. Darlene is a seasoned veteran in the insurance industry. She knows her business inside out. She ran an agency her entire life with her husband George in Chicago. She's now out in Arizona, and she knows her stuff. That's all I could tell you. She knows her stuff. She knows her business. She's also an excellent teacher, by the way, and she does teach with us in Kaplan, and she'll be doing her classes very shortly. These webinars are really a one-shot deal, and the reason that we are providing them is that so many of you on the call today had either taken an online course or you took a traditional live classroom course with Kaplan. You did all your studying, you worked hard, you said, all right, I'm ready to go take that state exam and knock this thing out of the box. And you schedule an appointment in February or maybe beginning of March. Or you were ready to schedule an appointment mid-end of March, only to be told, sorry, our doors are closed. And if you schedule an appointment, they canceled your appointment, telling you that they don't know when they're going to open. Well, the good news is that a lot of the venues, the testing venues, are going to be reopening in May. I know down here in Georgia, Pearson View, they're having their website that they're going to start, or they've already started actually, I believe, taking appointments for testing. So the purpose of these webinars is to go over the highlights that are tested highlights on majority of state licensing exams. I don't know word for word verbatim the question, but what we teach here at Kaplan is we teach you content. Because the problem if you just study a question is if that question doesn't take the format that you studied, you're going to be in trouble for the state exam. But if you understand your content, and here's what we emphasize at Kaplan, read the full question and read all of your answer choices. And if you do that and you know your content and you're careful what you're reading, then your probability of passing your state licensing exam on the first attempt is extremely likely, all right? And that's what our goal is here. That's what our goal is here, all right? We'll do everything we can to help you, but of course you have to run with the information and learn it. Okay, my clock here says 4 o'clock Eastern Daylight Time. So you know what I'm going to say if you've been on the call. Good afternoon. Welcome to webinar number 7, Commercial Package Policies and Commercial Property Insurance. My name is Paul Rosen. I will be a presenter, transmitting here from beautiful northwestern Georgia in a town called Dallas, Georgia. Yes, we do have a Dallas in Georgia as well. So we're taking some of those bragging rights away from the state of Texas. And on the webinar today, I have my wonderful friend and associate, Darlene London, who will be the moderator. And if you have a question, Darlene will do her best to try to get to everyone and try to answer your questions as best as she can. Our webinar is going to go for 1 hour, so we'll be ending at 5 o'clock. If you miss any part of the webinars are all recorded. So you do have the opportunity that if you miss any portion of the webinar, either the start of it, obviously missing the start of it, you're not hearing this yet, or you miss toward the end, you have to get it off before the 5 o'clock ending time, then by all means, you will be able to have opportunity to listen to it as many times as you want to listen to it. And what I always say in every webinar that we've been doing for the last week and 2 days now is that it's like me watching a Marx Brothers movie. I've watched the Marx Brothers movies, all the classics, Duck Soup, A Day at the Races, A Night at the Opera, Room Service. And every time I watch the movie again, I find another joke that I missed from all of the times I've watched it. So no joking here. By listening sometimes a second, a third, even a fourth, a fifth time, sometimes things that may not have been very crystal clear to you, by hearing it again, hitting on your cue bank, rereading things, writing things down. Now, the reason that we emphasize writing things down is that when you go to take that state licensing exam, the monitor or proctor for the state exam from Pearson View, PSI exams, Prometric, or if it's a self-regulated administrator that your insurance department is using, they're going to give you that grease board, that whiteboard board. And what you want to utilize that for is your brain dump. So we're going to be giving you over these 2 weeks a lot of things that we are confident that are frequently tested points. I always say in every webinar, you want to download your state exam outline. If you have a printer, print it out and mark it up, make notes on it. Or if you don't have a printer, copy it, save it to an Adobe PDF file on your computer or your tablet or your smartphone, and review it and go through that outline. And what you're going to conclude is that a lot of the bullets that we're covering here are on the outline. So 1 and 1 equal 2 here. So that means that if we're covering it here on the webinar and you see it on your outline, very simple. It means that it's probably going to be tested. All right, that's what it means. Now, our call today, as all our calls for the last 7 days now, are not going to get state specific because we have attendees on the call, 186 of you strong. I'm impressed. Actually, 184. We got to subtract Darlene and myself, but we have 184 of you on the call, of which you're from all different states. Now, the only thing that will distinguish your test is your state law supplement. So we provide to you from Kaplan a state law supplement. And at the beginning of that state law supplement booklet, you have on pages 2 or 3, and sometimes it's 2, 3, and 4, you have your cram sheets. And those are the lists of the most frequently tested points on your state exam. All right, so sit back, relax, enjoy the presentation here. So let us begin. And we're going to first start off with our commercial package policy. Now, think of a commercial package policy as all of us going into the supermarket. We're all going to social distance, of course. We all grab a wiped off shopping cart. And when we walk around the supermarket, once we're done with our shopping, we all get online to pay for our groceries. We're all not going to have the same shopping cart. So some of you may have needed a dozen eggs. One of you may want to get some meat. Some of you may want to get fish. Some of you are vegetarian. You want to get fruits and vegetables. Some of you may have gone down the center aisles in the supermarket, the junk food. Keep me out of there. So the point is that the beautiful part about the commercial package policy is we could tailor design the policy based upon our insured's needs. Now, when we hear in the property casualty insurance world, when we hear the word commercial, what the word package means, I should say, what the word package means is that it's a multi-line policy. So that means that this policy is going to cover both property lines, and property lines is always going to be our first party lines, as well as our liability, our casualty lines. Our liability, our casualty lines are going to be our third party. So we're going to have a common deck page, the declarations page. The deck page, once again, for those of you who may have missed earlier calls, the deck page tells us the 5 P's of your insurance policy. P number 1 is your policy number. P number 2 is the policy premium and mode of premium or frequency of premium payment. P number 3 is the policy term. Most commercial insurance is written for a 1-year term. So if I wrote a policy effective today, the 28th of April, 2020, that means 12:01 a.m. Eastern Daylight Time. I'm here on the East Coast. My policy took effect, my commercial package policy took effect at 12:01 a.m., April 28th, 2020. It's written for a 1-year term. That means it's going to expire 12:01 a.m., that policy term, April 28th of 2021. So P number 1 is the policy number. P number 2 is the policy premium. P number 3 is the policy term. When does it start? When does it end? P number 4 are the policy limits. So how much insurance do we have on the multiple lines? And then P number 5 is the person or persons that we're covering on the policy, the property or properties, if more than one, that we're covering on the policy. The common policy conditions. Once again, conditions are defined as your rights and duties of the 2 parties to the contract. The 2 parties to the contract are party number 1, the insured, party number 2 is the insurer. So we're going to have 2 or more coverage parts. One of them will be property lines, one will be casualty lines. on a commercial package policy or on all commercial policies means a business is buying the policy. So we're not talking about individual personal auto or dwelling or homeowners, where it's an individual buying the policy. Here we're talking now about a business buying a policy. So the business has to tell the insurance company who is going to be the point of communication, who is going to be the point of contact on that policy. So for example, let's say Kaplan, a school, is looking to buy a commercial package policy. Well, Kaplan has literally tens of thousands of employees, and I believe we're in about 96 or 98 countries worldwide. So the issue is that if Kaplan wants a commercial package policy, the insurer who they selected to buy their insurance from is going to ask, who do we contact to send the bill? Who do we send to contact for the renewal? Who do we send to contact for the claim that's in process? Who do we contact as far as the non-renewal? Premium increases, endorsements. Well, we call that party the first named insured. And the first named insured is always going to act on behalf of all the insureds on the policy. Your common policy conditions, once again, that first named insured is going to be listed where? In the deck page, remember P number 5. And as I said, the first named insured is going to act on behalf of all the insureds. Cancellation. Insurance company is canceling for non-payment of premium. Once again, do consult with your state law supplement. But for the majority of states that I've taught in over the 21 years with Kaplan, 29 years overall, when it is a cancellation for non-payment of premium, anytime there's a cancellation by the insurance company or a non-renewal by the insurance company, the insurance company must notify that first named insured here of the cancellation or non-renewal. Must be done in writing. They must state the reason for cancellation. And then if it's property insurance here, which we're talking about, they have to include a disclosure for the FAIR plan. FAIR stands for fair access to insurance requirements. And what the FAIR plan is our assigned risk for property coverage. So let's say our first named insured cannot place their coverage with another insurance company. The FAIR plan may be able to accommodate them. So when there's a cancellation for non-payment of premium, 10 days written notice must be given. That's the majority of states, but do double check your state law supplement. Could be a little different. Most states for non-pay, 10-day notice. If it is for cancellation other than non-payment of premium, then it can be for 30, 45, 60, 75, or 90 days. That will be dependent upon the state. That could be dependent upon the type of policy. Once again, your state law supplement will give you the exact number. So if the insurance company is canceling in midterm, the refund of the premium is going to go to the first named insured. If it's the insurance company canceling in midterm, that means the first named insured will receive a pro rata refund of the unearned premium. So if they paid for 12 months and the first named insured is looking to cancel, the insurance company rather, is looking to cancel after 7 months, the first named insured will get a 5-month refund for unearned premium. But if it's the first named insured who is canceling in midterm, then many times they may wind up, which what is called a short rate refund. Short rate refund is when the first named insured is canceling midterm. You got to look at the contract because there could be a penalty for doing so. Any changes in premiums, any changes to the policy, the point of communication by the insurer will be the first named insured, and the party of that commercial package policy who could be making the request would be once again from the first named insured. Now, on commercial package policies, with regard to the examination, books, records, and inspections and surveys, when an insurance company is going to come in to do an inspection or a survey, they're not doing it for safety checks. They're only doing it for the purposes of insurability and to make sure that the proper amount of premium was charged on that policy. An insurance company can demand an inspection or a survey or review of books and records, even up to as long as 3 years from the expiration of that policy. Now, on all insurance policies, there is always what is called an assignment clause. And what assignment means is that in this case here, in the commercial package policy, the first named insured is looking to transfer their rights and duties to another party. Now, in order to exercise an assignment, the first named insured needs to do a couple things. Number one, they must notify the insurance company in writing of their request, for example, that if they had a loss, that instead of having the claim check coming to them, have the claim check drawn and payable to the general contractor who's going to be doing the repair work on the building. Number two, the insurance company must agree and authorize and approve that assignment. Now, there's automatically an assignment of rights and duties should the first named insured pass away. Now, another testing point that's frequently tested on commercial property forms. Here's what's tested very frequently. Keep it in your back pocket. What lines of insurance cannot be covered by a commercial package policy? All right, once again, what cannot be covered by a commercial package policy? Number one, a commercial package policy cannot include life insurance. So if the business needs life insurance on the CEO, the CFO, the president of that employer that's buying the insurance, they have to buy the life insurance as its own separate policy. They can't put that into a commercial package policy. They also cannot put into a commercial package policy workers' compensation insurance. Workers' compensation insurance has to be written as its own separate entity. It cannot be put into a commercial package policy. Number three, any kind of disability coverage, health insurance, medical coverage, they too cannot be included as one of the lines on a commercial package policy, right? So if I didn't mention those lines that are covered, then the majority, there may be a couple others, just reference your book, but those are the ones that are the most frequently tested. So once again, life insurance, workers' compensation, any kind of health, medical, dental, disability insurance cannot be covered on our commercial package policy. So let's get into our commercial property forms. So on the commercial property policy, once again, what does every insurance policy have? It's always going to have a declarations page. So on that grease board that they give you with the dry erase marker, start your state exam, because they are all tested, time-tested exams. Write down declarations page. Do it before you go in, so this way you have it memorized. Better shot of remembering it if you keep writing it down than if you just read the book. So keep writing down declarations page, 5 Ps. What are our 5 Ps again? Once again, I know I keep saying it over and over, but it's very upsetting to me when a student misses passing a test by 1 point. And they're sending me an email or they're calling me saying, is the insuring agreement part of the declarations page? No. And they say, oops, that's why I didn't pass. So once again, our 5 Ps, the policy number, the policy premium and motor premium, the policy term, start and end date, 12:01 a.m., the policy limits, how much insurance, who is the first named insured, who is some other insureds that could be on the policy, so it could read all the employees of that business. And in this case now, we're talking about commercial property. So we're talking about real property. Real property means a structure, a building, as well as what is a business going to bring into the building. They're going to bring in their business personal property. So those are all going to be first party paid claims should there be a covered loss. You're going to have your commercial property conditions. Once again, conditions are the rights and duties of who? The two parties to an insurance contract. Now, who's the two parties to the insurance contract here? Two parties are going to be party number one, the first named insured, party number two, the insurer. So what is expected of each party as far as performance? First named insured wants coverage. Guess what they got to do? They got to pay the premium. If they don't pay the premium, they get that 10-day notice of cancellation. There's going to be one or more property forms on there. Now, as far as our cause of loss forms, if you remember from your homeowners and your dwelling form, remember what I said, consolidate and condense things, write them down. So anytime we see the word basic form for property coverage, basic form means named perils. And except for our homeowners forms, our HO8 used to be called an HO1, but on our dwelling form one, DP1, today now our CP1, and on tomorrow, when we talk about farm property forms, cause of loss forms, our FP1. So when we see that number one, that means basic form. Basic form means named perils. What does named perils mean? Very simple. Here are the perils that the policy is going to cover. As long as your cause of loss is on that list of named perils, you're going to be covered. If your cause of loss was not on that list of named perils, that means you're not going to be covered. Which brings us then to our broad form. Our broad form is also a named perils form, and broad form is always representative of the number 2. DP2, dwelling form 2, broad form. HO2, number 2, broad form. Today here, commercial property form, CP2, broad form. Tomorrow we talk about farm insurance, broad form, FP2. A broad form is named peril. The only distinction between broad form and basic form, I can't hear you, but you'll hear me, your big effect, your broad form perils. I will guarantee you on that state exam, you will see 6 or more, at least, questions testing you on broad form perils. So let's discuss what I call the big 9, big effect broad form perils. They are burglary, the weight of ice, snow, or sleet on the roof of the building, not the detached structures, the fence, glass breakage, accidental discharge of water, falling objects, freezing of your plumbing system, electrical current, collapse, and tearing asunder. So the distinction between your basic form and broad form, your big 9, your broad form perils. Remember them, you'll thank me. And then when we get to our special form is always represented by the number 3. So on dwelling, we talked about DP3, special form. Homeowners insurance, we talked about HO3, special form. Here today, we're talking about CP3, special form. Tomorrow, we talk about farm insurance, FP3, special form. Special form with the number 3 simply means you have open perils. And an open perils form distinguishes itself from our basic and broad, which are both named perils, in that a special form, open perils, does not list the perils that are going to be covered. Instead, what it's going to list are the perils that are excluded. So now on a special form, as long as your cause of loss is not on the exclusions list of perils, it means you're going to be covered. Very simple. All right, so we've just consolidated a lot of stuff here for you to memorize. Every policy is going to have a conditions. So when the first named insured has a loss, there's going to be a checklist, as we see here, that they need to follow. What's going to be on the checklist? Number 1, if you have a loss, contact your insurance company promptly. That's number 1. We always got to do that. Insurance company's not a mind reader. They don't know you've had a loss. Condition number 2, if a crime has been committed, someone broke into your premises, busted down the door or broke the windows, went inside and took the business personal property and vandalized the place, then you want to contact law enforcement and file a police report. Condition number 3, make reasonable repairs. What does that mean? It means protecting the property from further damage or loss. Maybe putting a temporary roof on the building. Maybe boarding up the doors that were broken down, the windows that were broken. Maybe putting a chain link fence around the structure to prevent vandalism. We want to inventory what's been damaged, another condition. Separate your damage from your undamaged property. You want to cooperate with your insurance company. What does cooperation mean? It means keeping the appointment with the adjuster so the adjuster can evaluate your loss and make a determination as far as how the insurance company is going to settle the claim. And then once you're in agreement with the insurance company for the dollar amount for settling your claim, then the insurance company will request a sworn statement, or they'll have you sign an affidavit as the first named insured that the loss you file claim for is a legitimate and true loss. Now, this here is sometimes tested. It says here the control of the property. So let's say I own a small office building, and in the small office building, I'm renting out an office space to a business that does telemarketing, but they're going to be telemarketing to the West Coast from the East Coast. So that means their day is not going to start at 6 a.m. like mine does, because it's 3 a.m., right? If I call Darlene up in Arizona at 6 a.m., she's not going to be happy with me to wake her up from a deep sleep at 3 a.m. So instead, they're starting their day at 1 or 2 o'clock in the afternoon, East Coast time, which is late morning on the West Coast. So let's say that business has a young kid that's trying to earn a couple extra bucks doing this telemarketing. The cleaning services have come in, they've left for the day. The kid is under a lot of stress. They got midterms, they got finals coming up. Their boss is getting on them that they got to start making more appointments. The kid is so stressed out. All over the building is posted, no smoking, no smoking, no smoking. The kid says, you know what, no one's here. The cleaning people are gone for the day. I'm going to light up a cigarette because I need a cigarette really bad. I can't leave this office because a big call is going to come in. And if I miss that call, my boss is going to have my head. Well, here's what happened. The kid gets distracted. And guess what happens when the kid leaves? The kid forgets to put out the cigarette. You know what's going to happen next. A fire occurs. And now that fire caused by that kid's cigarette damages the building. Now, would that be neglect by our first named insured their employees? No, that's by a tenant. So should they have a tenant in their building that is neglectful to get them to put out a cigarette and now it causes a major damage or fire, the insured will not be affected by that. The policy would still cover. Of course, what the insurance company will do is they'll wind up subrogating on that claim, saying, you know what, the fire is a covered claim, but wait a minute, it wasn't our insured or their employee that caused the claim. It was the third party, that tenant. We're going to subrogate against them. Now, let's say a first named insured is not paid on a claim, or they're not paid to their liking. Now, they could request an alternate dispute method, which we saw on personal lines, on commercial lines. Our two alternate dispute methods are the same: arbitration and appraisal. Arbitration is when there is a coverage dispute between the first named insured and the insurance company. Appraisal is where there's a dollar amount dispute. So an insured, a first named insured, as long as they complied with all the conditions of their policy, it's always suggested or recommended, some states it's required, that they first go the route of the alternate dispute method. And if it's not to their satisfaction, then go to legal action. They only could do that within 2 years of their loss. Now, should they have more than one policy? Once again, the purpose of insurance. And you're going to see today a lot of the bullets and terms we discussed on personal lines, they're exactly the same on commercial. So don't be afraid of commercial insurance, because much of the terminology and glossary are literally the same. So on a pro rata basis, if there's more than one policy and they're written on the same basis, that means one policy may cover 3/4 of the claim, one policy may cover 25% of the claim. If they're not written on the same basis, then one policy could be considered primary, one would be your excess coverage. But needless to say, whether we're insuring with one policy or there is more than one policy, we always must honor the concept of indemnity. And once again, indemnity means no loss, no gain. Insurance is not used to profit from it. On the other hand, insurance is not going to put you in a worse financial condition. The policy period, policy territory, we're going to find that in your deck page. 12:01 a.m. Eastern Time, January 1st, 2020 through January 1st, 2021, 12:01 a.m. Eastern Daylight Time in Georgia here would be your policy territory. So as long as the loss occurs during the policy term, as long as the loss is a covered peril, insurance company will pay on the amount of the loss up to the limits of coverage. Your coverage territory. Coverage territory always includes, and this is a good testing point to know, coverage territory always includes the United States, Commonwealth possessions and territories, Canada, and Puerto Rico. In order to have Mexico become part of your policy territory, you would need to request and have the insurance company endorse the policy to cover you for Mexico. But if there is no Mexico endorsement, Mexico is not part of your coverage territory. I already mentioned subrogation. Subrogation is automatic provision in the policy. And what subrogation simply says is if it was another party who caused our insured to have loss, that the insurance company paid a lot of money out for that loss, you automatically, as the first named insured, give the insurance company the legal right to go after that third party. So that would be that kid or that business owner that was renting the office space from me, to recover the money they had to pay out on that fire claim. Concealment and fraud, you're never going to be covered. Make sure you know your definition of concealment and fraud. What's the definition of concealment? Concealment means you're hiding information. You're not giving the whole truth, and nothing but the truth. So you didn't say anything not true. The problem is you didn't give all the information. That's concealment. Don't confuse it with a material misrepresentation. Once again, A material misrepresentation is when an insured makes an outright false statement. And when it's material, that means they're making a false statement that impacts the risk that first named insured was looking to transfer to the insurance company. And then make sure you know your definition of fraud. Fraud is defined as an insured, a first named insured, who with malice and intentionality is looking to deceive the insurance company. So concealment material misrepresentations do fall under the heading of fraud. Now, just like we saw in personal lines, on the commercial form, there's no benefit to the bailee. So let's say a dry cleaner buys a commercial package policy, or they buy a commercial property form here. The dry cleaner is going to be taking in their customer's property. Their customer voluntarily released their property to the dry cleaner, our insured, and it's now in their possession. Now, our insured cannot say to their customer, if there's an explosion at their dry cleaning plant, and not only is their property destroyed, but their customer's property is destroyed, well, our insured that has this commercial property form can't say to the customers, well, you guys must have a homeowner's form, or you have a dwelling form or a renter's form to cover your personal property, so go file the claim. No, there's always no benefit to the bailee, all right? There's always no benefit to the bailee. You're always going to have a liberalization clause. If these things sound familiar, it's because we already talked about it. The liberalization clause is when the insurance company is enhancing or increasing limits of coverage. And when it's the insurance company enhancing or increasing limits of coverage, no additional premium, no action needed by the insured, and the insurance company has to offer it to all their insureds that have that same policy. So what will be covered on a commercial property form? It's going to cover the building. It's going to cover any completed additions, fixtures, permanently installed equipment, elevators, escalators, heating systems, refrigeration systems, flooring. Now, this bottom bullet here, this is very frequently tested. If, let's say, the first named insured is having some renovations or repairs made to the building, any materials that they have outside the building that is within 100-foot perimeter of the building would be the same as if it were actually inside the building. So you want to remember that 100-foot mark. Good thing to know. It's also going to cover the business personal property of the first named insured. So once again, personal property, all right, just think about it. If the first named insured is going to move, they're not going to put the 25-story building on a flatbed truck to move. All that they're going to move is their contents. That's your personal property. Personal property would be the furniture, the desks, the chairs, fixtures, machinery that's not permanently attached to the building, obviously, equipment, stock, lease personal property. Now, will not be covered. Sometimes we can cover some of these things, but none of these here. Money, accounts, food stamps, notes, securities. Animals are not covered as personal property unless it's an animal that is being boarded or it's an animal being held for sale, like a pet shop or a veterinarian or an animal hospital. The outside roadways, patios, paid services not covered. Your contraband is not going to be covered, transported, or traded. Excavation, your ground preparation. Now, let me give you a bullet that you see a lot of times tested. Foundations. There's only one commercial property forms that cover building foundations, and that's our builder's risk forms. The builder's risk form, we have the completed value form and the builder's risk reporting form. Those are the only two policies that are going to cover building foundations. No policy ever covers land. The outside walls, bulkheads, docks, underground pipes are usually going to be the responsibility of the municipality. Vehicles, and then these other items here can be added as additional coverages: fences, signs not attached to the building, tree, shrubs, plants. Now, just like on personal lines, on commercial lines, when the first named insured, one of the employees, someone calls the fire department to come in, the emergency services, the fire department's going to put out the fire, and then they're going to leave. They're not going to clean up and tidy up the mess that they made. So the insurance company realizes that in order for the first named insured to have repairs and renovations done properly, we need to get all of the debris, soot, smoke, broken glass, broken wood out of the building. So they're going to provide you additional money on top of your policy's limits of coverage to cover costs for debris removal. If the first named insured needs to get business personal property out of harm's way, well, remember I said that the personal property, excuse me, except for our DP1, which will cover for 5 days, all of our other policy forms will cover property moved to another location, let's say computers, electronics. It'll be covered at that other location for 30 days. Fire department service charge. It's going to be raised up here now to $1,000, no deductible. You got a $10,000 benefit for pollution cleanup and removal, provided it's a covered peril. And then electronic data loss or damage, you got a $2,500 benefit per policy period. So a policy period means sometimes an aggregate. Our coverage extensions, 80% co-insurance has been met, so that means we want to get replacement cost value here. Newly acquired or constructed property, buildings, they acquire another building, automatically before it's added onto the policy officially, got $250,000 to the building, $100,000 for your personal property. And then the personal property of your employees, not bailee, right? So not your customers, but let's say I come to the workplace, I leave my laptop there, overnight there's a fire, and not only is the first named insured's property damaged, but my laptop is damaged, there's a $2,500 benefit. Valuable papers and records, you got a $2,500 benefit. Property that's off the premises, you got a $10,000 benefit. Here, remember I said that they may have coverage extensions for fences, antennas, satellite dishes, trees, plants, shrubs. $250 for any one tree, shrub, or plant, you only got a $1,000 benefit total, aggregate. And then non-owned detached trailers that the business may own has a $5,000 benefit. Here's your conditions section again. All right, everything that I've covered. Notify the insurance company promptly if a crime's been committed, file a police report, protect the property from further damage, which means making reasonable repairs is another way of describing that. Inventory what's been damaged, separate your damage from your undamaged property, cooperate with the insurance company to allow them to come in to inspect the damages. And then if they agree that there's a loss and you agree to what they want to pay, you sign a sworn statement or proof of loss form. Now, an insurance company, when they're evaluating a claim, they must make a decision within 30 days. But after the 30 days for making a decision, an insurance company could actually take another 30 days after that sworn statement of loss has been signed by the first named insured to pay the claim. So hypothetically, it could take as long as 60 days for a claim to be paid. But I can tell you in the real world, if you're dealing with a legitimate insurance company, you're dealing with a legitimate claim, they're going to have a payment for their loss before the week's out. Now, how will the loss be settled? The business personal property is going to be settled on an actual cash value basis. Our formula for actual cash value, same as what you saw in personal lines, replacement costs minus depreciation. And if it's a property loss that's under $2,500, then the insurance company is not going to deduct for depreciation, and it'll cover it on a replacement cost basis. The definition of the word vacancy. Same definition as what you saw on personal lines, nothing different. A vacant property means what you see here in this picture. No people, no business, personal property inside the structure for 60 consecutive days. Now, if you've ever walked past a strip mall, right, and the stores there, and you look in the window, you see for rent or lease on one of the stores that went out of business. And you look in the window, you see all types of stuff spewed all over the place, chairs, broken showcase. You see a whole bunch of stuff in there. You say, wow, these people are real messy. No, these people are real smart. Because instead of leaving the property vacant, where if the property were vandalized or there's glass breakage or theft or water damage, they would lose coverage. Instead, by leaving some of the personal property behind, it's no longer labeled as being vacant. It's labeled as being unoccupied. And even on an unoccupied property, if no one's been in there for over 60 days, you're not going to lose your coverage for vandalism, glass breakage, theft, or water damage. Well, just like an individual takes out a mortgage on a house, a business takes out a mortgage on a building. Well, the bank or lender who's providing the money to buy the building under the standard mortgage clause of a commercial property form will require that the first named insured lists the bank as an additional insured, named insured, and additional loss payee. With the bank now being listed under the standard mortgage clause as an additional insured loss payee, that means now the bank has all of the same ownership rights as the first named insured. So if the first named insured neglects to pay the premium, the bank can pay the premium so the policy doesn't lapse. If there's a loss and the first named insured doesn't report it, the bank can report it. If there's a loss and the first named insured does not make reasonable repairs, the bank could order for reasonable repairs and renovations and repair made to the building. Now, just like we saw on personal lines, if the first named insured or one of his or her employees purposely put explosives all around the building and lit the match and ran, and there's an explosion, the building is damaged, the first named insured is not going to get 1 penny of insurance money. However, the bank holding the mortgage, whatever the outstanding mortgage is at the time of that loss, they'll be paid the money from that policy. Our formula for coinsurance, once again, what they did divided by what they should have done, multiplied by the loss, minus your deductible. Your builder's risk form, your reporting form, your completed value form. These are usually written for a 1-year term. So this is going to be sold to a general contractor or a construction company. This is the only policy that will cover building foundations and any of the materials, equipment, or supplies that are on the premises. As long as they're within 100-foot perimeter of the building, it'll be covered on their policy. Now, what will not be covered on builder's risk forms: land, flood is not covered, outside trees, shrubs, plants, the antennas, the signs that are not attached to the building would not be covered. Okay, so your completed value form, that means that if the building upon completion is going to have a sales price of $30 million, completed value form means we're buying $30 million of insurance right out of the box. It's going to be more expensive to buy it that way, because this way the construction company doesn't have to remember, like they do on the builder's risk form, of having to report every 30 days how much of the construction project has been completed. Now, the builder's risk reporting form will be less expensive, but here's the caveat. Should the first named insured or their assistant neglect to make a report, so let's say it's going to be a 20-story building, half of the building has been completed, all right, 10 stories, but the last report given to the insurance company was 8 stories. If there's an explosion and the first named insured neglected to notify the insurance company of the increased value of the project, all that insurance is going to pay out on is the value that was on the last report, which is why a lot of construction companies don't want to monkey around with this. They just go to a completed value form. Now, on a completed value form, if they completed only half the project, well, the insurance company is not going to pay out for the full value of the building because only half of it was completed. Condominium coverage form. So this would be offered to a homeowners association or a condominium association where there is common property that is shared and owned by all of the homeowners association or condominium owners. I, as an individual in the condominium association or the homeowners association, I don't own the common property of the clubhouse. So there's an explosion or fire at the clubhouse. That's the responsibility of the condominium association, who is assessing me a homeowner's fee each year. Now, there is going to be an assessment fee on a HO6 where, let's say there's damage and each homeowner is assessed so much money, that assessment fee would be for $1,000. So the commercial unit owner is only responsible from the walls in and their property. The walls out would be the condominium association's responsibility. Some of our business income forms, we have the time element form to cover for business income. That's where there's a suspension of business following a covered loss. Now, there's a lot of debate out there right now. And there's a lot of insureds that are very unhappy with their agents and their insurance companies because of civil authority. The government, the state government, the city, the town is saying you cannot open in your store and do business. Now, some of these policies say ordinance of law, but if you read a little bit into the exclusion, it doesn't mean ordinance of law due to a catastrophic event, such as what we're dealing with right now. So there's a lot of issues going on with that. I don't want to get into it too deep, not in your test, but be aware of that. So I don't know if in the future there may be changes to these policies, which means if there are, they have to cover it. Watch what happens with the premiums. We also could cover for extra expense. So extra expense means there are certain businesses, like a hospital. A hospital can't say to the community, listen, none of you get sick and none of you get in an accident because we had damage to our hospital building and we can't operate right now. No, the hospital needs to operate in some way, shape, or form. So they may set up a makeshift hospital with some trailers. Maybe there's a vacant building half a block down. Perhaps they could lease or rent that space for 6 months to a year and set up a makeshift hospital. So on that extra expense, we're calling it an extra expense because had there not been a fire where the hospital was damaged, we wouldn't have incurred that extra expense. Okay. We also can have as an optional coverage an extended period of indemnity, a maximum period of indemnity, a monthly limit of indemnity, or an agreed value, which will establish a yearly amount of agreed coverage. Other business income from dependent properties that we could add on our policy. Contributing location, a business that provides the raw materials for our insured to complete their product that they're selling to their customers. A recipient location is a dependent property form. So let's say not our insured, but their biggest vendor They have an explosion at their warehouse and they call our insurer and they say, listen, the 10,000 piece order that we placed, you're going to have to put that on hold because we have nowhere to put the items that we ordered. Well, that means our insured, if they can't ship, they can't invoice, they lose money. And then your manufacturing location, that provides the manufactured goods to the insured due to loss of income, where the manufacturer now cannot supply because the manufacturer had a loss. So we see the words dependent properties. It doesn't mean that our insured had a loss, but rather a business our insured is dependent upon causes our insured to now lose revenue and business income. We also could have what's called a leader location. So many times in a mall, where a small business owner wants to have their store geographically located, is right next to the anchor store. So they want to be next to the Macy's or Lord & Taylor or Home Depot, whatever the big stores is the anchor. Well, the anchor store goes out of business. That means there's not going to be any foot traffic going that way. That's going to mean that our insured is going to lose revenue and business income. So if they have a leader location endorsement on their policy, means they could be indemnified. Extra expense and legal. So in the extra expense, we have it as a time element. 40% of loss of income for the first 30 days. The next month, 80% loss of income. And then if there's loss of income greater than 60 days as a time element, and also for extra expense, you'll be covered at 100%. Our legal liability coverage forms covers damage to property of others, but only if our insured is legally liable. If our insured is not legally liable, means they can't go after us. So once again, here's our basic form perils, which I've talked about. Now, two perils that we have that we didn't see on our basic personal lines: the sprinkler leakage and the sinkhole collapse are two additional named perils on a basic form. But all of our other perils, a fire, lightning, internal explosion, a WC shaver, a B&M is still on there. On our broad form, what I tell you earlier, and I'll tell you again, you want to know these memorized. Write them down. Keep writing them down, big effect, till you're reciting it in your sleep. All right? I don't even say that to be funny. You will thank me, I promise you. Make sure you know your big 9 broad form. So your broad form gives you all the basic form perils plus your big 9, big effect. Okay, special form. Special is not going to give you a list of named perils. Instead, it's going to give you a list of exclusions. Wear and tear, depreciation, rust, corrosion, fungus, decay, deterioration, smog, pollutants, settling, cracking, shrinking, or expansion, which is normal for a new building. They're not going to cover for. Damage caused by insects, birds, rodents, or other animals. Mechanical breakdown, explosion of your steam boilers, pipes, engines. Those are going to be covered by other forms. Dishonest criminal acts of the insured or the insured's employees. Once again, illegal, intentional acts are never covered. Or if the first named insured, their employee, was tricked by fraud in departing with property, they were induced to do so, not going to be covered. Okay, some of our endorsements. So we can add a value reporting form. So this will allow the insured to report value. So we sometimes have businesses where there's peak season, sometimes they call it peak season reporting endorsement, where there's certain times of the year where they may have more inventory. Ordinance of law, that's important. Now, let's say an insured did put that ordinance of law endorsement on there. Ooh, good question right now. Spoilage. So any business whose inventory is heavily dependent upon freezers and refrigeration. They have perishable inventory. A grocery store, a restaurant, a bar that serves food, a ice cream shop. They lose their freezers, they lose their refrigeration. Their inventory, if it's really hot and muggy summer days, the inventory becomes trash very quickly. And then earthquake is not a covered peril, but just like on personal lines, we can add an earthquake endorsement. But here's where you gotta be careful with the trickery on the state exam. Earthquake endorsement on commercial property form, it's considered one claim, which means one deductible, as long as that aftershock or that second event on commercial lines occurs within 168 hours of the original earthquake event. Whereas on our personal lines, the earthquake endorsement says it must occur within 72 hours, the aftershock. Okay, we made it through another webinar, number 7. I will leave you all to my wonderful associate, Darlene. I thank you all for taking the time out in your afternoon to listen to our webinar. Anyone who came on a little late, if you missed anything earlier or if Darlene doesn't get to you, there will be a recording that'll be available and you can listen to it as many times as you like. And like I said, sometimes you listen the second, third, or fourth time, all of a sudden things start meshing together. So on behalf of Kaplan and myself, I sincerely, from the bottom of my heart, thank you all for selecting us for your educational needs. We will be back tomorrow to provide you webinar number 8. And webinar number 8 is going to be covering farm insurance, equipment breakdown, and the big one, which is your commercial liability insurance. So have a wonderful rest of the day, afternoon. Darlene, take it away. Paul Rosen, over and out.